Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. If you're loving what you're hearing on the show, go out and tell 2 friends today. Show them how easy it is to subscribe to the show. The Real Estate Espresso Podcast is available on more than 20 different platforms. And wherever you listen to podcasts, you're sure to find the Real Estate Espresso Podcast. Spread the love around. Why keep all this goodness to yourself? On today's show, we're talking about the fallout from last week's stock market correction. Investors hate uncertainty, and whenever there's uncertainty, investors go running for the hills. This is why investors finally woke up to the earnings warnings that have been resounding through the back alleys of Wall Street in the past 10 days. Is the drop in corporate earnings going to represent a V-shaped blip, or will it be more of a U-shaped business impact? Will this viral outbreak last until the spring and then disappear, much like SARS did in 2003? Or can we expect this virus to circulate around the globe multiple times, including mutations of the strain? Will the supply chain disruptions result in a weak Q1 and a roaring Q2? Will the drop in travel result in airline and travel industry bankruptcies? As real estate investors, it's easy to be complacent and to say that real estate is insulated and largely unaffected. Tenants still need a place to live, they're still going to pay their rent, and we haven't seen any job losses being announced on a large scale, at least not yet. We keep hearing that investors have a lot of cash sitting on the sidelines, and in the past week, we've seen the markets fall about 12%. The losses total $6 trillion in just 5 trading sessions. How many day traders were undisciplined and didn't close out their positions at the end of the day? How many day traders will have their margin accounts called in? How many investors left their cash in the market too long and were waiting on the right real estate transaction before cashing out of the market and using their gain to invest in a qualified opportunity zone investment? Exactly who was impacted by the loss of wealth? The bottom 50% of the population in terms of net worth are likely not to be impacted all that much by the stock market correction, and very little in the way of holdings. Where they are at risk depends on where their pension plans have funds invested. Now, if you've been listening to this show for a while, you'll know that I've been advocating getting out of the market for some time. The valuations haven't made any sense. But here's where it's going to start to hurt for real estate investors. If your traditional sources of capital have been impacted by the stock market correction, they may be feeling a little conservative at the moment. They might be saying it's not a good time to make investments and would rather wait a few months to see what's going to happen in the market before making any commitments. Remember, investors hate uncertainty. So if there's uncertainty in the stock market, it may cascade into their sentiment about investing in real estate. They might be asking questions like, how will the coronavirus outbreak impact real estate markets? It's a difficult question to answer. How many people will wait for the quarantine orders to subside before making a decision to buy a larger home or invest in a multifamily apartment complex? You may find that investors who had committed funds to a syndication all of a sudden pull back and decide to wait it out. I know of at least 3 investors where this has happened. The good news for real estate investors is that the yield on the 10-year Treasury has dropped even further in the past week. Interest rates on permanent financing is indexed to the 10-year Treasury yield, which means that it could be an excellent time to rate lock into permanent financing or refinance into a lower interest rate. There's no question that the rates of infection are quickly going to multiply. I took an hour this weekend and created a mathematical model which simulates the spread of the coronavirus. And if the current rates of infection remain unchanged and quarantines prove ineffective, we can expect that much of the global population will be impacted within the next 90 days. This is a difficult time to be raising capital from investors who are not true professional investors. The family offices that take a long-term view tend to see companies in the stock market as a long-term investment, and they tend to see investments in real estate as long-term investments. When you plan to hold a multifamily apartment complex for 20 years, of course you expect there will be a few economic cycles during that hold period. High net worth families are less concerned with rates of return and more focused on preservation of capital and minimizing downside risk. If you're raising capital in today's uncertain environment, it would be a good idea to check in with your investors and make sure they're still on board. You may want to communicate your perspective on the economic uncertainty and how it could impact your projects. There's no question that raising capital in today's environment is probably going to be more difficult than it might have been only a month ago. As you think about that, Have an awesome rest of your day. Go make some great things happen. Talk to you again tomorrow.